Namaste. Hello. My topic for today is specialized field in finance. So in my introduction video, I told you I'm an accounting and finance lecturer. So finance is something which runs in my blood. I've been doing it for decades now. So I thought I would like to spread some awareness about stock market. So that's all about today's video. As the name suggests, stock market is the marketplace where one can buy and sell stocks. A company has to be listed on the stock exchange for its shares to be traded. By the way, what is a stock? A stock is a collection of any number of shares. So the stock market is divided into two parts, cash market and derivative market. The cash market is where you can take physical deliveries of shares. The derivative market is where you can trade in futures and options. Futures and options are derivatives that derive their value from underlying assets. Today, I would like to speak more about the basics of cash market. Prices are decided by the demand and supply of the share. The higher the demand, the higher will be the price of a share, and vice versa. The higher the supply, the lower will be the price of the share, and vice versa. That's economics concept. So demand is the key factor that determines the price of the share. We need to focus on the demand of a particular share to determine whether we should buy it or sell it. Demand is driven by two factors, macro factors and micro factors. Macro factors are those factors that affect the prices of the share at the larger level. For example, bull run in the stock market due to high GDP growth rate in the country, pandemic fallout, lockdown in the country, interest rates hikes or slowdown in the country by the central bank. These factors affect almost all of the share prices. Micro factors are those factors that affect the prices of the shares of an individual company or the particular sector of companies. Example, quarterly results of the company is better than industrial average if they win a bid or a project, giving a grant to a particular company, that all will help in hiking up the price of that particular company. The current example of rise in the prices of crude oil will adversely affect the GDP of the oil importing countries, resulting in the large payment, ultimately facing a large balance of payments. But at the same time, this is a favorable situation for the oil exporting countries. So we come to the conclusion that the common thing in the macro and micro factors is one word, expectation. If you expect the prices of the shares to go up, you can buy the shares. If you expect the prices of the shares to go down, you can sell the shares. But remember, the trick is to hold the shares, which I will talk in my later videos. Some other factors also include, again, the macro factors, for example, the worldwide lockdown, which resulted in the stock market crash. But at the same time, people are expecting the pharmaceutical companies to develop the vaccine, so their prices shot up. In software companies like IT companies, the devaluation of the rupee will help the companies in the export. It is believed that every percentage fall in the rupee will improve the bottom line by 30 basis points. Non-performing assets in banking sectors, the higher the NPA will affect the share price of the bank adversely, and vice versa. An increase in net interest income, which is NII, will help the bank to expand, and it will increase the share price. A company having statutory compliance issues will have a low share price because nobody wants to invest in this kind of companies, and existing investors will try to sell all their holdings and quit, adding up more selling pressure. Similarly, nobody wants to invest in a loss-making company, eroding the capital, and companies with high competition levels. Oil and gas companies will be benefited if the prices of crude oil and natural gas increase, as these companies can sell their end products at a higher price, leading to higher revenue. So the price is affected by the expectation in the market. If the market expects the price of the shares to go up, then invest in that share and vice versa. These are some of the factors affecting the prices of the shares in the long run or the short run. I hope I'm clear in making you understand the major functioning of the stock market, but this is just the beginning. So wait for my second video where I will talk more about the stock market. Thank you for listening. If you like my content, please subscribe to my channel and watch my other videos as well. Thank you. Namaste.